Welcome to the debate. Our focus today is on investment strategy for short-term rentals, specifically near the south entrance of Yosemite National Park. We're going to be comparing the two main submarkets, Oakhurst in Madera County and Mariposa in Mariposa County. And the question is really this: does Oakhurst's, low regulation and higher revenue make it the better bet? Or does Mariposa's structured, high-barriered entry system offer better long-term resilience? I'll be making the case that for cash flow, Oakhurst is the clear winner.
And I'm going to argue from a slightly different angle. Look, speed is great, but I contend that the initial hurdles you face in the Mariposa market actually buy you necessary regulatory certainty. And that certainty is, I think, crucial for building real, defensible long-term equity and avoiding the kind of regulatory surprises we see all over the country.
Okay, but when you look at just getting started, Oakhurst is just unmatched. The process in Madera County to get a short-term rental permit is incredibly fast. We're talking 1 to 2 weeks, and it costs less than $300. That speed translates directly into revenue. When we benchmark a high-demand 3-bedroom property with something like a hot tub, Oakhurst properties are estimated to pull in $73,900 annually. That's significantly more than Mariposa's $59,600 for the same kind of unit. It's a 24% revenue advantage right away.
That high revenue number is compelling. I won't deny that. But let's talk about what that Mariposa structure actually buys you. Yes, the process is longer, 1 to 2 months, maybe $1,200 to $1,500, but this is an investment in due diligence. Mariposa requires inspections from planning, building, fire, and environmental health before you can even open your doors, so your compliance is clarified from day one, which reduces the risk of a stop work order or, some costly retrofit later on. That initial clarification, for me, is just a prerequisite for long-term confidence.
I see why you value that certainty, but that certainty comes with a pretty serious cost. It severely limits your upside. Mariposa caps permits at 3 permitted bedrooms and a maximum of 10 guests. That completely prevents investors from realizing the enormous revenue potential of the larger homes, the 4- and 5-bedroom places that command the absolute highest daily rates. In Oakhurst, a 4-bedroom with a hot tub can easily get $460 a night in peak season. Mariposa just takes that whole asset class off the table.
See, I'm not totally convinced by that argument because Oakhurst's simplicity today, to me, signals vulnerability tomorrow. We've already seen discussions about proposed caps on bedrooms in Madera County, so Mariposa's rigid limits, frustrating as they are now, are at least stable limits. They insulate the investor against future regulatory shifts. You're essentially trading some peak revenue for guaranteed long-term market access.
But let's look at the engine of that revenue. Oakhurst benefits not just from Yosemite, which is huge, but also from the tourism draw of Bass Lake. That dual attraction drives substantially higher summer volume and allows for peak pricing that Mariposa, which relies almost entirely on the park, just can't match.
That's a powerful peak season point. However, the data shows Mariposa has a slightly stronger balance in its year-round performance. We see better shoulder season occupancy and longer average guest stays, mostly because it appeals to visitors looking for more privacy, for that quieter, rural experience. It creates a more reliable, balanced annual revenue curve, even if the absolute peaks are a bit lower.
Okay. But let's talk complexity. Mariposa's multi-unit strategy, allowing only 2 STR permits per MH-zoned parcel, it just seems overly complicated. Does the benefit of that niche zoning really justify such a long and expensive permit process?
It does, because what it enables is a robust, diversified strategy. Those MH-zoned parcels let investors blend their income stream, so you can operate one fully permitted STR while, say, converting a detached ADU to a monthly rental for local workers. This hybrid model diversifies your revenue away from just tourism, which makes the whole asset more resilient against an economic downturn. That kind of long-term strategic option justifies the initial investment in time, I think.
Well, ultimately, investors have to weigh their priorities. For those who need to get going quickly and prioritize maximum cash flow from, premium amenities and large group bookings, Oakhurst's low friction and superior revenue numbers offer the fastest return on capital. It's that simple.
Strategy portfolios, like blending STR and long-term rental income, they'll find Mariposa's strict compliance and clear structural limits lead to an investment that is just more defensible and predictable over a 10-year horizon.
Right. So the best choice really comes down to whether an investor is seeking that liquidity premium you get from speed and peak revenue, or the regulatory premium you get from structure and mitigating your risk.